Welcome everybody.
Another edition.
We're back. Welcome back, Wadid.
Thank you.
I'm Patizo Madinga. We are changing globes one at a time.
One bulb at a time.
This is the Africa edition.
Mm-hmm.
Excited to be back. We've got a very, very, very interesting episode, I hope, ahead.
Yeah.
But
certainly an interesting company.
Certainly an interesting company indeed.
The episode might not be so great, but
the company will make us look good. Sure. We are about trying to help you if you are trying to increase your wealth by investing in companies. We suggest that you invest in companies that make the products that you love. But how do you know it's a good investment? Unfortunately, we also don't know. But we know how to analyze public records, we know how to analyze information, and we're hoping that in our analysis we can help you understand the company better and help you with your decision.
Yeah, and I think it's probably important to point out that we focus almost exclusively on fundamental analysis.
Yes.
Which is really about choosing, understanding a company, understanding how the company operates and makes money, and basing your investment decisions on that understanding.
Indeed.
So we proponents of fundamental analysis.
Indeed. Indeed.
In that regard.
Yes. So if you're investing, this does not institute financial advice.
Definitely
financial advice from a financial advisor.
Yes.
We just hope to supplement.
Yeah, all we're doing is using our own learning to analyze the company.
Yes.
And share our analysis with you. What you do with that is your choice.
Yes.
But what we are doing here is not giving financial advice. It's merely an analysis, our analysis of the company.
Of the company. And the company this year.
This episode.
This year.
Oh, we're doing this once a year?
The company this episode, and in my view, probably a runner, what is it? A contender for Company of the Year.
Yeah.
It's Shoprite.
Yeah, Shoprite.
www.shopriteholdings.co.za is where you'll find the group company. In there you'll find the annual report, and we are basing a lot of this analysis on a SENS report that they've issued. The annual report isn't out as we were recording this, but the SENS is very comprehensive. It's almost like an annual report, and that reporting period ends, I think it ends June 2021, but they've got an odd thing where they pick a date and they pick the 4th of July this year.
And then I noticed that like I had 52 weeks and 53 weeks in there.
Yes.
So like up to 52 weeks. So I'm guessing that in that week they had a big
a readjust or something.
Yeah.
But
I get the impression it was maybe one of the sales either. Or
a lockdown, COVID.
And then they got a lump sum into and so that shifted the books to.
Yeah, they do restate a lot of the numbers, so they try and do an apples to apples. So it's not an alarm in any way. It's just how these reports are written. So Shoprite, a lot of people, if you are in South Africa or a couple of key countries, would have heard about Shoprite, but why is this company important to Africa, and why is it important to South Africa? Before I ask you, Walid, according to us, let me read what they say. According to them, they say we are a business with over 142,000 employees.
I didn't get that. Could you try again?
So note.
No,
make sure you switch off your setting.
I don't know how.
Exactly. When you are recording your podcast.
I'm going to cut it from here. Okay, let's try that again. So Shoprite, according to them, say we are a business with over 142,000 employees, thousands of stores, and network of distribution centers across Africa. They serve local communities with the lowest price promise. Over 24 million people shop in their shops, and their footprint of more than 2,913 stores
across Africa.
Across Africa, absolutely. So that is who they are, according to them, in a nutshell.
I buy that.
And according to you?
No, certainly. I've always liked the Shoprite story.
Yeah.
For many years, I've been following. I mean, and of course the turnaround that was done by YT Basson.
Yeah.
From the time that he took the reins,
Yeah.
and you know the famous story of buying OK for R1,
Yes.
and he's built a phenomenal business. Like I've always liked the business. It has a positive impact on the community and does really help communities in their core business in terms of being able to bring well-priced product to those communities that otherwise would have no access to this product.
I agree.
Kind of thing. And then of course the expansion into Africa. Of course in this financials we see a lot of cutbacks and getting out of the Africa operations, understandably so. And we'll get into those details a little bit later. But I think still a very important business for South Africa and Africa. A very well run business. Eh?
It is.
I mean, sure, what these guys are doing. I mean, there's so many exciting things in this report.
We can't wait. We can't wait. Why do they matter though? What would South Africans be poorer if they had gone out of business, and especially as we dive in the countries that they do pull out in, why do they matter to these geographies? And I like to go through the annual report and look according to them.
What they say.
They say.
How do they perceive their...
Yeah. And I picked two phrases that I loved. The first one is really a phrase. Price fighting stores.
That's a good one, eh? Yeah. Price fighting stores.
And I thought that was actually quite excellent. And then when it comes to South Africa, we had a very big unrest, civil unrest. A lot of KZN stores in parts of Gauteng were looted mid-2021. And one of the things they pride themselves in, that despite all of that, they still aspire to create employment. And they say it's critical to improving the lives of the fellow citizens, and they created 3,897 jobs this year. So,
and that's significant. Yeah?
That's significant.
That's very significant in a time where during COVID of the 2020, we lost about 3 million jobs as a country. And certainly in the first quarter of this year, of 2021, we lost a further 585,000 jobs. Significant. And so Shoprite here, 3,800 seems like a small number relative to those, but in the context of our economy, in the context of the pandemic, it is an enormous achievement to be able to create almost 4,000 jobs in that same period. So certainly kudos, a phenomenal achievement. When every other company is retrenching and cutting back, Shoprite is creating jobs.
So if you invested in this company, you created jobs?
Yeah.
You created nearly 4,000 jobs in a very tough situation.
In a very, very tough situation, yes.
According to us, I looked for a nugget that maybe I could share and say why they matter. And the biggest shareholder is actually the government pension funds.
PIC?
No, the GEPF, Government Employee Pension Fund.
Oh, okay, directly.
Yes, directly.
Okay.
So they're a majority shareholder. And so when they do well, you know, our civil servants do well. And we have all had a little bit of abuse when we go to the front office of public offices like Home Affairs. And you know, as soon as I say Home Affairs, I have flashbacks. Traffic department, oh, even worse. But really, these people are trying to serve us as civilians, and at some point they will retire. They will need a plan, a long-term plan in terms of pensions, so to see pensions investing in a company like this, or being able to create returns in a company like this, I think makes Shoprite important.
I think for me, it's their innovation. I mean, for decades they've been a particularly innovative company. Primarily starting out, they were focused very much on distribution supply chain innovations, etc., etc., etc. And that has stood the test of time for them. They've built the most efficient, most effective distribution supply chain infrastructures, and that's what they're really good at. I think we would be so much poorer for effective distribution strategies that they have pioneered, where they were the lone voices in terms of how to distribute. So those build that kind of innovation and building that kind of infrastructure has always been a cornerstone of the way they do business. And now with their more recent 60/60 innovations and their rewards, you can see that is part of, it's ingrained in them, and they're continuing to bring out these innovations that's making retail innovations that's having quite an impact.
Yeah, and when we think about where we are now in terms of companies, and I think whether you call them blue chip companies or flagship companies, all of them at the heart have mastering supply chain as the key differentiator. You talk about Apple, it's all about, I mean, that's why Tim Cook elevated and became the CEO there. You talk about Google, you talk about Samsung,
Alibaba,
you talk about Alibaba, you talk about
Amazon.
I was trying to think, he's some rich guy. And
biggest employee in the US,
yeah,
like
absolutely.
950,000.
You know, not a million, so I'm not impressed. then we come locally, and again you see the same trend, and that's why I think Shoprite is a flagship, because they managed to do that. Other companies that they stand next to within the Naspers group is you have Takealot. So it's all about mastering this distribution and the supply chain that puts you head and shoulders above ordinary companies. And so I think you're absolutely right. That is a gem to have in the country. So if you want to buy these shares,
I just want to add something. I mean, sustainability for them is also, and
yes,
and they certainly do put their
money
where their mouth is.
Yeah.
You know, they're supporting 2,500 home gardens. You know, home gardeners that's growing vegetables that they're able to sell through their stores.
Yes.
That's quite an achievement. They've got 1,500 small and medium enterprises that in their supply chain that they're supporting. Solar energy is a big thing. They're converting and they're utilizing solar, so renewable energy sources.
Looking at their footprint.
Yeah, looking at the energy footprint and reducing that with renewable resources. Their recycling focus and the recycling of all the plastics and so it is certainly an organization that is environmentally conscious, that's conscious of the community, and is doing their bit in terms of supporting and helping and growing the broader community, not just there. Yeah?
Okay.
So a nice holistic approach to adding value.
Indeed.
You know.
I mean, just as an anecdote, I have in my previous life come across Shoprite. I've been to Shoprite's head office. I'm not the best in Cape Town in terms of where things are, but I think I was in Bellville.
Yeah, that is really not
and when you arrive at head office, and I'd gone to see the innovation /IT team.
Shoprite X.
No, not Shoprite X.
This is before.
This is before.
Oh, okay.
But these are the same guys that would be involved in Shoprite. Absolutely.
Yeah, okay.
And when I met this team, I think the things that stood out for me when I visited Shoprite is when you arrive usually at a group head office, you are served quite premium products.
Sure.
Your Nespresso level, or you maybe even have a barista if you've been to Discovery.
Sure.
You can have a whole Starbucks dedicated to you.
That just sounds like envy. But okay, keep going.
but at Shoprite, a lot of their private label brands, in fact not a lot of, everything they serve you is from the private label brands. If you like coffee, it's private label. If you like cappuccino, the sugar, absolutely everything. And so they eat their own food.
Yeah.
And that's good to see. That
Yeah.
tells you that they are really trying to live a day in the life of every day. So I would agree with you in terms of how innovative they are and how immersed they are as well.
Yes.
If you want to buy their shares, they're on the JSE. So they're
Yeah.
listed on the JSE.
I don't know what the code is. What's the code?
I didn't check the code. I forgot the code. But Shoprite Holdings. So
We'll find it and
yeah,
then
we'll
we'll edit it on.
We'll put it here.
Put it there.
Okay, and of course you can use your bank to find a broker. All South African banks, or most South African banks, have brokers, or you can have an independent broker, and you can get yourself your hands on such shares. So now that we know who Shoprite is, 2,913 stores later, let's do a little bit of a look at their strategy. I like to start with what they sell, besides geography, but I will touch on geography as well. How do they define their revenue segments?
I think maybe as you go into this, maybe just start off with a little bit of an explanation on product as strategy.
Yeah. Okay, so.
And your views about.
Yes. So let's do it the other way around. Strategy. What is strategy?
Yes.
So
let's start there.
My view.
Yes.
So before strategy is product, I like to tell this story.
Sure.
And I think that's my view of strategy. Strategy is stance. That's as succinct as I can get. Strategy is the stance that you take in the thing that you're doing. If we go to sports, that thing would be a game, and that game would be centered within a long-term goal, to be the best team, to make Wimbledon look good wherever your team is from, whatever it may be. And so we know what vision is, we know what mission is, we know what goal is, we have all of these things. But when we touch on strategy, I'd like to think it's the stance that the company takes, knowing everything about their environment, knowing everything about their own abilities in order to be the most valuable company that they can be. And if this was in sports, if I'm a team that's playing a game against your team, strategy starts with me understanding how you will stand. So if you stand your stance, so if I believe with my intel, so strategy now is intel. If I believe that you will be standing, let's use soccer. I'm the worst in soccer, but I know the numbers at least. If you are standing 4-3-3,
yes,
right, my decision that I make about my team will be based on the fact that I think you are standing 4-3-3. And so the first time that you'll see my strategy is the stance that I choose to take as we hop onto the field. So I may choose to stand 4-4-2. I hope 4-4-2 can play against 4-3-3. Let's believe it can. But as the game then begins, also part of strategy is I must look whether you stay in 4-3-3 formation, because you will also react to the fact that I came in 4-4-2, and you might change your strategy to another number, 5-3-2. So where's 4-3-2 from? I don't know. Anyway, you change yourself to another number. But when you change yourself to another number, 5-3-2, I may then choose to change myself to another number. And so the ping pong goes. So that's, I think, from a strategy point of view. So if ever we were to ask a soccer team, after all of that explanation, what's your strategy? The best answer they could give is the stance that they are taking. So we are a 4-3-3 team in the English Premier League, but when we play in the South African Premier League, we stand 5-3-2. So, and that's very understandable. So when it comes to companies, now we try and transfer that kind of thinking and say, what could we look at in terms of a company and what is universally a 433, a stance. What stances do companies take? And invariably, because they have to sell product to their customers, they can't hide the product they're selling to their customers. There are some secret sources that go into how they make that product. It can be a good place to start to say, we can see a company's strategy by the products that they choose to sell. And then because we know it's long term, we can also, and that's why we then dive into our strategy, start understanding how they understand the market 2-3 years from now, and how they're trying to change their current product
into that future
position. Why would they do that? Why don't they just stay the way that they are? Why don't they sell exactly the same product that they're selling today, 5 years from now? It's because they're selling to customers, and customers' needs change. And customers' needs change because of them improving their lives, their customers improve their lives, and just generally also market forces, as the economists call it. And so a good management team is one that's able to forecast the let's call it the possible 3 futures, and prepare best for those futures, and as late as possible change the products of the company so that when they find themselves in that future, where that future is now today, they can still sell the most valuable product. And then I suppose lastly I'd say to that is, what is value? Value is the most a customer will pay you, and for a product that you produce, and then internally the least capabilities that you use to produce that product. So very much like the equity discussion we had, the delta, and that's the value. So if you're selling a product today that's 100 Rand and it costs you 90 Rand to make, the value is only 10 Rand. And if you're a good management team, you should be trying to change that product to either reduce your 90 Rand down to 50 Rand, or to get the customer to pay more as the future goes.
Cool.
And so with that in mind, then back to your initial question, product as strategy for us is then that, where we look at the product and we look at it almost in 3 phases. We look at what it was and how well it did, what it is now, and how you're trying to change it, and our belief based on everything that we read, whether that's a good thing to do, and then how you think your product will be in the future, and then we have a viable company.
Cool.
Great
stuff. Thank you very much.
Super. So when we then start this, and that's why I start with that question, I say, what do they sell? It's to your point, to answer this product as a strategy, but to try and look at it from a layman point of view. We don't want to talk the buzzwords. We don't want to be leading. We don't want to be exceptional. We don't want to be innovative. We don't want to be competitive. All of those amazing words. What do you sell? What do you really sell? Because if we look at the annual report, there'll be numbers against the thing that you sell.
Absolutely.
And it's a good way to see your stance as a company.
Yeah.
Absolutely.
And I suppose what that also guides you to is how to review that strategy. It gives you like guideposts. It's like, are they selling in alignment with the strategy? Is their strategy in alignment with what they're selling? And that gives you good insights as to how well this management team is actually putting this organization together and driving this organization forward.
Absolutely. Cool. Great. So looking at Shoprite, they split themselves into. They start off kind of simply. They make it 4 things, but then we can unpack. I think the first thing you'll see so they talk about supermarkets in South Africa is the first product that they sell, and then the second product is supermarkets that are not in South Africa. The third thing that they sell is then furniture, because furniture is not a supermarket. And then the fourth thing kind of captures all the things that are not supermarket or furniture for Shoprite.
And they consolidate that together.
They kind of consolidate all of that together. So under the let's start with the furniture, because that's the easy one. They're now down to one brand there, which is OK Furniture.
So they've been consolidating their
They've been
furniture.
consolidating their product, and now they're down to OK Furniture, which makes up about 4% of their revenue.
And House and Home?
House and Home collapsed into OK Furniture.
Okay.
And based on the SENS, they don't talk about House and Home. So I think the consolidation happened there. All the House and Homes became OK Furniture.
And of course, the Checkers Hype is also sell furniture.
Yes, but it's classified under supermarket.
Okay, the Checkers Hype.
The Checkers Hyper.
Okay.
Right. Then the next one, to get that out of the way, is what they call the other, which is the other operating segments. And under there, they've got OK Franchise. They have Transfarm. They have Medirite pharmacies, and most Medirite pharmacies are actually within a store. They have Checkers Food Services, and Checkers Food Services customer is restaurants.
Yeah.
And
so that's what you'd call a B2B, a business to business. So
Absolutely.
And that's quite different to the rest of the organization, right? That's very interesting to see.
Yeah.
But I suppose the things like CompuTicket and those guys are also business to business.
Yes, and so that's the last one that they mentioned, which is CompuTicket. Yes.
So Checkers, Food Services. So all the other businesses are retail businesses, so direct to consumer, business to consumer, so individuals coming in buying from you.
Absolutely.
And then they've got these two business to business businesses.
Yes.
Where you sell to restaurants and you sell to
hospitality,
hospitality
hotels,
promoters and things like that.
Yes, absolutely.
Events. Organizations.
So that would be the two segments, the furniture and the other. And other, I think we should. If we were there, we would name it B2B, but others not bad. And then the last two are separated by geography, in South Africa and not South Africa, and these are the supermarkets. And they have quite a few supermarkets, 1,726
in total
stores of that 1,900 odd number is supermarkets. So they have Shoprite, they have USave, they have Checkers, and they have Checkers Hyper, and they have Liquor Shop. And lastly, as an honorable mention, so that's actually all the stores, but as an honorable mention, I did like that they actually look at their private label brands. They don't state any numbers, but they do track their private label brands across the group to see kind of how well they're doing. So it's an interesting little segmentish.
Sure, and then they've also started introducing Freshmark, right? Which is the, I suppose, the competition to food lovers, right?
Yes, I will chat about that one a bit later on in terms of what they're doing.
Because they seem to be introducing it inside
the store.
Inside the other store. So it's
absolutely.
So it's more of a, I feel like it's a strategy of leveraging my existing assets into new revenue streams that I otherwise didn't really have access to.
Absolutely.
And so it's like this fruit and veg thing, which they are now like blowing it up.
I mean, you saw it with the it's Medirite, right? Am I saying that right? Yeah, Medirite. With the Medirite, so they've always had this little counter in the store where you could get cosmetics and you could kind of get toiletries, and then that became something that also now had your self-medication, which then extended to some scheduled medication, and then a full-blown pharmacy, and now they've got a whole different. Okay, so Shoprite X, this digital tech, the results that you can see that come out of there, because we've experienced these results, is extra savings reward program. So the extra savings reward program is whether you have it on your phone or maybe they give you a card in store. It's you tracking your savings as you buy. So it's like your rewards program. That comes out of this team, the Tech Hub team, and I bet you we will not spend much time on that one, because the second thing that comes out of that team is 60.
Yeah.
60.
So these are two amazing products.
These are two amazing products.
Yeah.
And I will jump into the 60-60. In fact, I'm going to ask you to jump into the 60-60. But before I do that, let me mention this one other thing that comes out of this team that you don't see is 2 years ago, with all of these different divisions that we're speaking about, the supermarkets, the businesses themselves, the B2B businesses, furniture, etc. They had customer records that were specific to those entities. And so they kicked off a single system of record project. And from the single system of record, they managed to now, as a customer, they can see your OK, your checkers, your all of these things. And that's what forced the digital tech hub to come together. So that was almost the beginning of
again,
the tech hub.
examples of how to do digital smart.
Absolutely,
right?
absolutely.
So later on in the report, they talk about their SAP implementation in 2019.
Yes.
What was very interesting for me to note was so little scars from that implementation. It was like,
anyone who's been in a SAP implementation
knows.
is either retired or goes to therapy.
PTSD from the SAP implementation.
Absolutely. Absolutely.
And so certainly smartly done.
Yeah.
Creating this one system of record across the group is an essential component to actually leveraging that data in a meaningful way, to be able to consolidate it in a meaningful way. If I don't have good data, I can't do data science.
Absolutely.
Right?
Absolutely.
And so knowing that relationship between the two, you can't just throw a bunch of data scientists in a room and then give them crap data. They can do nothing with it.
They can't change a light bulb.
And so very smart, methodical, measured approaches to doing digital innovation smart.
Yeah.
Create a single system of record.
Yeah.
Consolidate my data across my group, across my brands.
Yeah.
Right? Get that cohesive. Get that clean. And now I feed that. Now I feed that to an innovation team.
Absolutely.
And let's see the magic happen.
Absolutely.
Right? So again, very smart digital. Very smart tech, very smart. I note also that in the CEO's report, talks a lot about technology.
Yes.
Talks a lot about IT, Shoprite X, Shoprite Superpower X.
Yes. And you can feel it, right?
Like a big portion of his report is like
all about that.
Yeah.
And that's very good to see because usually, IT gets lipstick.
Yeah.
It's the core. It's
yeah,
the core
and
of
here
the
you can
business.
see it's not.
But it's not at the board. It's not sitting at the board. It's not sitting at the decision-making table. It just gets told.
Yeah.
And it begrudgingly builds.
Yes.
And then this data can't be pulled out by the very people who told it, and they begrudgingly use IT. And with this, you can tell that it's seamless. IT is at the decision-making table.
No, 100%. And so you can feel in this organization this digital transformation happening.
Yeah.
Right? When the CEO starts owning it, and the CEO has got it in his reports, and he's talking to the board about it clearly.
Yeah.
Right? And they've established innovation divisions, they've done systems of records, and so you can see this organization is becoming digitally. They're going to be a digital powerhouse. They are adopting digital well, they're adopting it smart, they're not just running off and doing any old thing. They are thinking about what they're doing before they do it. And as a result, they're coming out with things like X rewards and 60/60.
And you see it in their returns. The
Absolutely.
return equity,
Absolutely.
It's worth it. It's worth it. If you are a CEO, if you are looking at what kind of leadership you should adopt in order for your organization to become a digital leader, Shoprite is a good case study. If you know somebody at Shoprite, get in touch with them.
Absolutely. They are certainly, even I would be as bold as comparing them to the banks, that these guys, as far as their digital strategy is concerned, is probably a couple of leaps and bounds ahead of even the banks that we have in South Africa. And around all of this, before we dive into, I want to dive into the 60/60 thing.
Yes.
But before we dive into that, looking at this innovation center and the phrase that catches my eye around their digital strategy is this thing called precision retailing.
Yes.
So you see it with the Shoprite X guys.
Yeah.
I see it in the report of the.
Yeah.
That phrase has caught my
It's a very
eye.
good phrase.
Yeah.
Yes.
And for me, how I interpret precision retailing is I start knowing my customer better.
Mhm.
I understand the profiles of my customer. I understand them almost to an individual level.
Yes.
And if I understand my customer to an individual level, and I'm giving that customer the retail experience,
Yes.
the precision retail.
I maximize value for the customer, for myself. Absolutely right. Absolutely right.
So I'm so excited to see what these guys are going to come
Yes.
and bring
Yes.
around precision retailing.
I mean,
And I'm looking forward to the next few years.
I mean, talk about phrases that I liked as well. Another one was because they've been talking about stores, and I'm talking about supermarkets because it's stores and it's supermarkets. And in one place, as they're talking about tech, they don't say stores. They say they are micro fulfillment centers. You know, when you can start. You take your business model and you start understanding the value
Exactly.
that you can extract from the business
Yeah.
model. You start, what's that phrase that I've always loved? When you change how you see things, the things that you see change.
100%, right?
Yeah.
And here you can see them
Yeah.
using this technology mindset
Yeah,
and understanding how operating models shift,
yeah,
right?
absolutely.
And that for me is, I'd like to segue from that operating model shift into 66.
Definitely. I mean,
So-
this is, go for it.
Yes, so for many years,
Yeah.
we've had online grocers.
Yes,
And largely, we've only had two.
yes,
We've had Pick n Pay and Woolworths as online grocers for over a decade,
yes.
10 to 15 years.
In fact, Woolworths, just to position,
Mm.
you know, they're not sitting back and
Yeah.
they've just thrown
Yes.
lipstick on a website, right?
Little
Um,
bit, but yeah.
No, I mean at the
Yes.
team.
Yes,
I mean,
yes,
they've
yes.
got an innovation team.
Yes.
They've got a store of the future
Yeah.
down in Cape Town. They are throwing bells and whistles
Mm.
at this online
Yes.
effort
Yes.
of theirs.
Yes.
And then, to your point, 10 years of them leading this pack.
Yes.
What happens to 60?
Yes. And then 1660 comes, turns the operating model on its head
Completely.
and shows them this is how it's actually done.
Completely.
Right? And I'll be honest with you, I hear what you're saying about Woolworths innovation team, but what they have been doing and the reason it's not been successful is they've really just been putting lipstick on a pig. Right? They and Pick n Pay made themselves guilty of how to do digital wrong.
And no,
What they did,
I do agree with you that it's wrong, but I will defend them.
yeah,
But I also criticize them. So I don't. It looks like lipstick on a pig now, but it wasn't. What they decided is what you and I needed, and they spent the last 10 years building what we needed. What Shoprite did is they came and they understood what we needed,
yeah.
and then with the understanding of what we needed,
Yes.
they went and built it.
Sure. So I suppose you could say it's an approach
Yes.
difference.
Yes.
But for me, that still leads us to lipstick on a pig.
It's very expensive lipstick.
Yeah, very. I mean, because there's no ways these guys were making any profit of their online
No,
presence,
no.
of their online, for years and years and years, right? And for me, it's a function of not adapting the operating model, not taking advantage of the digital technology to adapt the operating model.
Yes.
What they've effectively done, what they did was they treated their online shop like another retailer
Yes.
and said we've got a distribution center.
Yes.
Yeah. But now because it was a virtual retailer, they didn't have the rest of the shop infrastructure.
Yes.
And the shop, and what is that shop infrastructure for? That shop infrastructure is for debulking products
Yes.
to make it feasible for the end consumer.
Yes.
And because they missed that gap,
Yes.
right, they put it on the distribution center.
Yes.
But the distribution center doesn't break power, can't
Yes.
do that.
Yes.
And so those processes in the distribution center that was now being utilized to
Now,
services.
1 mil.
Yeah,
At a distribution
now it just
center,
falls
right? 1 mil.
apart, guy. It's
Yeah.
and for 10 years it's been falling apart, right?
Yes. That's why they take 14 days to deliver.
And I know this because I'm a regular user of that service, and I know how terrible
I
it
can
is.
imagine how the big sigh would happen at the DC when they're like, oh, another order.
Yes.
Somebody ordered online.
Exactly, right?
Yeah.
Because what they did is they took their standard processes and they just automated it.
Yes.
They didn't think through what are the operating model changes needed to make this work. Another terrible thing that came out of this process was when I placed an online order, and I used to be a regular of the Woolworths.
The Woolworths one, yeah.
That when they don't have my product in store,
I'm afraid of what you're just about to say, but carry on. What do they do?
they choose by themselves the next closest thing that you might want.
You might want.
Might want.
But they don't ask what you're just about to say, but carry on. What do they do?
They choose.
Yes.
I did not order this.
Marmite instead of
There you
peanut
go.
butter.
Oh, we were out of stock,
Yes.
so we gave you this instead.
Yes. Hope you enjoy it.
Now it's groceries.
Yes.
How do you send the stuff back?
Yes. Yes.
Right? Because
Wow.
then they didn't have a mechanism for you to send the thing
That's
back
amazing.
either.
That's amazing. That's amazing.
So,
Yeah.
disaster upon disaster upon
And-
disaster, because all we're doing is we're automating a process that works in a particular context,
Yeah.
and now we want to make that process work digitally, and it can't work that way.
And you're absolutely right. And I simplify even more, and I say they believed, they knew what was important to you without asking you.
Without
And a good example is substituting your product.
Yeah.
There's a team that sat, and somebody, I'm assuming it was a business process analyst, picked up their hand and said, oh, I've got this flow. The happy flow is fine, but in this alternate flow, when they don't find the product, what happens? Like, oh, but you've got 27,000 items. Pick the next best one.
Yes.
What? But what if it's more expensive? Then give them a discount. I mean, I'm guessing that without speaking to a human being, without speaking to a single human. In fact, they are customers as well.
Yes.
At what point did they not think, as a customer, if this household is buying soy milk because they're lactose intolerant, you know, the next best product to soy milk could be almond milk and could be fresh cream milk. The algorithm, if you set it up without speaking to a human being, will take the next cheapest product so that you don't pay more. So it'll take fresh cream milk.
Fail.
Who did not? Anyway.
So
That's
it's
what's amazing
probably
about this
right.
tech.
Probably it's a case of the pain that I'm experiencing at my DC to deliver this for you. Be grateful that I'm giving you this other one.
Yes.
You know what I mean?
And what I love about Checker 6060, and just to speak about that name for a second, around this not speaking to a customer, is because Checkers, Shoprite Holdings see themselves as these price champs, these lowest price people, and I can almost assume that their knee-jerk reaction was to name this online retailer something that would tell you how cheap it was, right? Like cheap, or
60.
00, like how like near free 99. Like they probably had one of these names. But credit to this digital tech team. They did what we know as design thinking, being empathetic to the customer. So they went out to the customer, they listened to the customer, they tried to figure out, how do we remove friction in your life? Is a lower price going to reduce friction? And I can guarantee you, every customer was like, no. I'm buying online, I'm being charged a service fee anyway. Price is not my issue. My issue is I'm ordering bread because we need to have breakfast.
Yes, now.
And they figured, time.
Yes.
Right?
100%.
So,
Time.
and now you can see
groceries and time.
Absolutely. So using data science, technology, digital talent to save customers time and money through innovation. So they knew if it wasn't money, now it's time. And hence the name 6060, because it's going to be 60 minutes. Within 60 minutes, there's a guarantee, I believe, that you will receive your stuff within the hour.
Yeah.
I don't know what you get because I haven't received my groceries outside of the 60.
Yeah, they're always within the.
Because that's what's important to me. That's what's important to me. So.
No, 100%, and that's what's important to buying groceries online, which is very different to buying a book online or buying CDs online or other material online. There was this grocery model, and the other models weren't working for this grocery model.
Yes.
Right? So even if you look at Amazon.com and things, are they selling groceries online? No, because the model is so different. But Amazon went to go buy retail stores so that they could deliver, so that they could build this kind of 60/60 capability.
But even at Amazon, they've got Prime.
Yes.
And Amazon
Same
Prime
principle,
being, I will pay more money to get it sooner.
Yeah, on time.
Yeah.
And so certainly the need was there.
Yes.
And the 60/60 guys responded to that need. So how does 60/60 go about it that's different to the online shop, right? Because now we've seen the 60/60 success has been so great that they've now been copied.
Yes.
Right? So Woolworths has come up with Woolworths Dash, Pick n Pay has come up with Pick n Pay ASAP, and Massmart has gone and bought one cart.
So what happened to all the 10 years worth of
it's still there. My suspicion is it will disappear in the next year or so. But it's still there. So what 60/60 did is they focused 1 year on their side, and then they said to themselves, we can't do this from a central distribution point of view. Right? So let's use the distributive nature of technology. Right? I don't know if this was a conscious process, but this is what they ended up doing. And let's run it from our stores.
Yes.
Right?
The micro fulfillment center.
Micro fulfillment center, right?
Yes.
And let's get that from our store to each of our customers. Yeah. And then they said, but now what is our customers? How do we deal with returns? How do we deal with changes? So okay. So they changed that operating model completely, and they said, what we need to give our customers is a personal shopper.
Yes.
Is somebody that will do the shopping on their behalf.
I'm telling you.
Right?
Into the personalized world, the Uber world.
That friend, what's it? Precision retailing.
Precision retailing.
Come on, guy. Right? So now, personal shopper. So they get your order, they get what you want. They go to the store. Sorry, we don't have this. They're with you immediately. We don't have this product. What can I get you as an alternative?
And I don't know.
Your order, they get what you want. They go to the store. Sorry, we don't have this. They're with you immediately. We don't have this product. What can I get you as an alternative?
And I don't know, and so I speak most probably out of turn here, because this is an anecdote that I've heard that sounds true, but I haven't yet gone to verify it. So there's a little company called Zulzi, ZUZLI, that came about just before lockdown, well before lockdown, and as an answer to the distribution problem. And they came up with these personal shoppers, and they came up with this little very innovative model. And what I've heard anecdotally is that this team, seeing this, said to what you should do from an innovation point of view, don't reinvent a wheel. See a startup that seems to have everything that you embody. They're doing something special. They've gotten it to a point where it's out of startup and it needs scale now, and you pull it into your organization, into your own machinery, and you make it 10 times better. And I heard that they did this with the Zulzi, which is what gave them, instead of spending 10 years of figuring you're smarter, how understanding, recognizing this personal shopper being the key unlocker to saving time.
Well, so it shows how to do online grocery shopping. You needed to change the operating model. You needed to add a personal shopper that is able to interact with you, personalize that shopping experience,
and ask you,
and adapt.
So soy milk's not here.
You want this thing in an hour, you better respond to me right now.
Because I'm standing here.
I'm
no
getting
soy milk.
And so
soy juice.
What the app is showing you is, okay, we're starting with your order now. which kind of orientates the user already to say, okay,
Oh, wow.
they might communicate with
Yes.
me to tell me about
Yes.
things. Okay, so
Yes.
they're starting, so the shopper's walking around the shop picking my basket.
Yes.
And then say, oh, this is in, that's in, ooh, we got this problem.
Yes.
And so you actually see the progress of the personal shopper
Yes.
as they're shopping.
Yes.
Your list of groceries.
Yes.
Yeah. Then the second innovation is obviously the delivery mechanism.
Yeah.
Instead of having cars and trucks, they
Yeah.
put it onto scooters, low cost, easy, quick delivery. The average basket size was the solve, right?
Yeah.
Why do I need a truck?
Yes.
Why do you need a bakkie?
Yes.
The average basket size is this size, guy.
Deliver your eggs.
Yes. Like, come on.
What kind of eggs?
Eggs, bread, and milk,
Yes.
right?
No, true.
Average basket size was like, oh, but guys, a scooter's big enough.
And to your point, I mean, these models are leaning on processes that are there. If you look, we had the Mr. D deliveries, we had the Uber Eats,
100%. If you took the time.
and you had your
Yeah.
pick and pays.
So
So
we-
really throw them in, to be fair, your Shoprites and
Yeah.
guys going, look around, and these guys did. They
Yeah.
did,
When you order from a Woolworths and a Pick and Pay online,
Yeah.
it's a truck. A bakkie comes to
Yes.
deliver stuff to
Yes,
you.
I'm not surprised.
It's like, how's that cheap?
And I wouldn't be surprised if they also charge you a bucky rate to drop it off at your house.
Well, you see, that's the problem. They can't, right?
Yeah.
Because they've got to sell the product at the same price that it's in the store.
Okay, I'm looking forward to the Woolies one day when we do that one.
So-
But
so,
yeah.
so 60-60, and so this is not just us, right?
Yeah.
So they've great guns. They've
Yeah.
gone well. They've through lockdown.
Yeah.
I think they got a little bit of a push through lockdown as well because everybody was at home and they needed a little bit of online
Sure, but
interactive.
But I say that to the same breath of you watch your favorite tennis player and they struggle because it was raining. Like, was it not raining for the other competitors? It was raining for everybody.
Yeah.
And they played.
No, 100%.
Or maybe I should take off when it comes to
100%.
rain. And so similarly, yes, lockdown, but all the other grocers.
100%. So they've certainly broken the records. They've broken the records in terms of the most downloaded
Yes.
app for South Africa.
Yes.
They've
They've got
broken
awards.
records. Yeah, they've won many awards
Yes.
with this thing.
Yes.
And they've still got so much further that they can go with the
I agree.
60-60. So what I love about it is it's a good use of digital technology to transform an operating model.
Right.
Use the technology smart.
Yes.
Don't put lipstick on a pig. Don't just
Yes.
automate a bad process
Yes.
and say, oh, we're doing digital.
Yes.
Rubbish.
And whenever you hear the word disruptive innovation, and it means a lot of things to a lot of people as they explain it, this is what disruptive means in that context. It means to change the business model because the technology,
Yes.
the supply chain
Yes.
can improve.
100%.
Yeah.
The outcome is still the same.
Yes.
I'm buying groceries.
Yes.
I'm still buying bread and milk and eggs.
Yes.
I've been buying bread and milk and eggs for as long as I've been alive.
Yes.
Right?
Yes.
But the way
I
and
buy, yes.
yeah, and the changing of that operating and the changing of my experience
Yeah.
of that.
Yeah.
Right? I mean, just quickly anecdotally, yesterday my daughter's homesick.
Yeah.
She phones us and says, there's no milk at home.
Mm.
So we say, oh, okay, make something else. She says, no,
She wants the milk.
order 60-60 for me. So we're like, oh, okay, we'll order 60-60 for you.
So
20 minutes later, she had her
She's
milk
got it.
and she could make what she wanted to make.
so that next generation dragging you kicking and screaming
Yeah, absolutely. Right?
into
It's like,
the 21st
no.
century.
No, I'm not walking to the shop.
Yes.
No, I'm not
Yes.
gonna. I'm too young to go to the shop.
Yes.
No, just order me the 60-60. I can-
That's amazing.
No, I'm not gonna eat something else.
Yeah.
Like just order the 60-60 and I'll be. And so that behavioral shift, everybody's now.
Yes.
And so 60-60 is just such a great example for me
It is.
of how to do digital well and how to
It
do
is.
digital transformation well.
And when I think about this team, and for them to achieve 60-60, that's a very, 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 very big laurel
Yeah.
to rest on.
Yes.
You know, you can kick your feet up. You can take it a little bit easy now.
Yeah.
You're quite ahead of the competition. They're imitating you, but you
Yes.
were the first. What is this team up to? Again, back to our Shoprite, to the Power X team.
Yes. Yes.
Checkers Fresh X.
Yes.
That's what they're busy with this
Yes.
year.
Yes.
And I did stop you a bit earlier on.
Yes.
This is where
Mm.
I want to talk about Checkers Fresh X. So,
Sure.
so introduce our audience. What is the next thing? The next best?
Yeah,
big
off,
thing
like so now
after
they've already
60-60.
kicked with X rewards, they've kicked with 60-60.
Where
And
they
now
go.
they go to Fresh X.
Yes.
So
So Checkers Fresh X. I want to talk about how they're going to achieve it. So can I ask you to more speak about what's happening with these vegetables? What's happening?
sure.
What's
so,
going on? What's
so,
going on?
so, so, so there's a couple of things going on. So again, I never get the sense that these guys knee jerk anything.
Yeah.
Right? They like think about these things
Yeah.
long term and forward, and they're planning it out, etc. So we touched on this a little bit earlier, but in their report they talk very specifically about where Fresh X is
Yeah.
and how they're integrating it into their stores and
Yeah.
bringing it to the fore.
Yeah.
My anecdotal interpretation
Yeah.
is this is their response to Food Lovers Market
Yes.
and the success that a Food Lovers Market has had with fresh produce, fresh product, straight from the farmer, made available in a nice, fresh way, and access to fruit and veg. And fruit and veg is always an exciting
Yeah.
component in any store,
Yeah.
as opposed to the commodities
Yes.
that's on the shelves, the packaged goods and
Yes.
things like that.
Yes.
And so to make a real bang of, now how do I now take this, what we've seen as a great market in terms of fresh foods, how do I now leverage my footprint of my stores and add this capability to that footprint of my stores? Kind of thing, such that it represents an additional revenue stream.
Yeah.
Now we've seen them do similar things with different product lines, right? And they've been doing this now with some success. So they've done it with KNet,
Yes.
which is effectively their mobile phones, etc.
Yeah.
They've done it with Money Market. I've always loved their Money Market business because it was always another good example of digital technology being used smart.
Yeah.
Right?
Yeah.
Where they brought feet into their stores by allowing people to pay their bills
Yeah.
as well. Right?
Yes.
So people come to the Checkers
Yes.
because I can pay my bill there. I don't have to go
In fact,
to
how
the
they-
CBD. I don't have to go
how
to
they
the
got into the computer kits.
yeah,
Yes.
that's and then they ended up buying compu tickets,
Yes,
right?
yes.
Because then you could pick up your compu tickets
Yes.
and you could buy compu tickets.
Yes.
So they became the compu ticket footprint in
Yes.
the end, right?
Yes.
So they scaled compu ticket
Yes.
dramatically. So
Yes.
so they're good at this. They can
Yeah.
take, as
Yeah.
Zul's example you used
Yeah.
earlier, they take these little businesses
Mhm.
and then they use their retail footprint to scale them.
Yes.
And then multiply
Yes.
that revenue that comes out of that business. And because they have this store, the shop footprint already, scaling costs them so little.
Yes.
Yeah, and they've got a great distribution infrastructure already, and so they can just add on to a great distribution infrastructure.
Yes.
They can add on to a great footprint, store footprint, etc.
Yes.
But we've seen now. So fresh. So internationally, we've seen like the Whole Foods
Yeah.
chain, which was a big success in the US,
Yeah.
and Amazon has just acquired that
Yes.
that chain as well.
Yes.
But it's fresh food movement. They've got fresh everything: fresh butcher, fresh fish, fresh one place, healthy food, fresh food, etc. That's the concept that Food Lovers Market brought to South
Yes.
Africa,
Yes.
and that has certainly been very successful.
Yes.
And so, in my mind, Checkers is doing this Food X to transform their own fresh food segment of their retail into a much more powerful offering to the new movement of healthy eating, healthy foods.
And I think what's interesting for me to watch, you know, they opened their Rosebank store, and in this report they talk about, they actually say that they've grown their stores to 41, so they've gone from 28 to 41 of this format.
Mm.
But to speak of this format a little bit, the Rosebank one introduces honey on tap, stone baked pizza, a sushi bar, a chocolatier, an in-store kawaii, an in-store Starbucks, but of course the selection of meats and veggies expertly prepared on an imported rodizio grill. Okay, so this Rosebank having all of these things in store. But these are very high LSM things that we mention, and we don't forget that the job of Shoprite is to fight prices. So when we think about Fresh X, what then excites me in terms of how they're going to change the business model, because they will try and save time and save money. What are they going to do in terms of these innovations? And already they hint here what they'll be busy with this year. Back to the Zulzi example, sometimes you just got to stand on the shoulders of a startup that's kind of moving along, and you bring it into the beast. You change it a little bit into Shoprite Holdings, and then you scale it. They are speaking of a proposed acquisition right now of Mass Cash. So Mass Cash and Caddy is the wholesale division of Massmart. This brings into Shoprite Shield, which is a wholesale, Jumbo, which is a
Jumbo
cash and carry, Rhino, Cambridge, a meat processing plant. Don't know which one it is, but for me, the fruit spot. And so this purchase gets these brands under the Shoprite label, and all of a sudden on the fruit spot side of things, you now can extend your abilities into a whole new supply chain, bring it in, and you are able to now bring in fresher, cheaper, localer produce than you already have, which is already exceptional. So think 60-60. What will they do in Fresh X once they have this fruit spot footprint, once they have the format of Fresh X in terms of what they're changing? What are we likely to see in terms of the next for Checkers is what I'm excited about that Mass Cash acquisition. And then the second thing about it is, and that's why I said you can't say Shoprite is out of Africa, because that acquisition now gives them access into Namibia, into Mozambique, into Botswana, into Swaziland, and into Lesotho. So you're starting to see that they never give up on Africa, but they are real about the value that they can bring, about the prices that they can fight. And I think that's great for our neighboring countries. That Shoprite in another form is going to be there. Yes, it's going to be, if you look at your Shield, Jumbo, Rhino, and Cambridge, they're going to be falling into your P&P, but all of a sudden you've got a fruit spot that's B2C, and then you've got this Fresh X that's next to it. Where do we go? I think that's going to be exciting.
Definitely.
And then in terms of other things that they're changing this year, Shoprite. We spoke about extra savings reward program. Shoprite has got a Shoprite rewards card as well. And so that single system of record is very important, because you now have an extra savings reward and you have a Shoprite rewards card. So we're going to see how does that play out. 12.7 million signups on the Shoprite side, just to give you an idea of the scale that you achieve when you're a digital tech hub within Shoprite. They have opened 37 USave Ekasi boxes. So drop shipping on the low. So that means there's 37 stores, USave stores, that now have these drop shipping ability for a lower LSM. People who take a lot, so I'm going to open these drop boxes in those areas. So nice innovation
Nice opportunity.
Nice
around that,
opportunity to see there.
Leverage that footprint.
Absolutely. And then when it comes to their liquor shop, it's not an innovation, this one. But here's the interesting thing about them. They were closed for 144 days. 60 of those days were in this period, were in the previous period. But yet they opened 37 new stores. So we're not talking about a tech innovation, but just from adapting to the environment point of view, I think that's very impressive.
It doesn't seem like they slowed down in their store.
No.
In their store.
When you look at their numbers,
yeah,
their numbers are good.
yeah, they kept adding more stores.
Absolutely. So I think when I just think about what's changing for them this year, I want to add liquor shop into that because of firstly just the lockdown, what they went through in terms of the lockdown, and then secondly the civil unrest and what the rest of the Shoprite group, and especially around the liquor, went through there. For them to exit at the year at such a phenomenal position, I think that's incredible. And then I did want to talk about their Angola, which we did chat a bit about. That one's not good. So I think we're going to see them exiting Angola.
Yeah, I thought Angola and Zambia.
Yeah.
For me, the two key things was the stuff they can't control.
Yeah.
The hyperinflation and the currency devaluation.
Yeah.
Yeah. So
it's a matter of time, and even though the language that they use, it doesn't feel like they're trying to solve this problem anymore. And then the furniture one, I think that's a bit of a letdown, unfortunately, for me. I think the furniture, OK Furniture is a very important way for a lot of households to get reasonably priced furniture, and especially in your peri-urban, out into the rural areas, and they're giving out less and less credit. So the credit applications have decreased. The consolidation of the stores that we've seen there. So I think that OK Furniture division needs a fresh rethink of that model, or it's also on its way out. So I think that would be
packaging it for
that would be the only other sad thing. All right, so that's Shoprite. What are the chances of success when it comes to their strategy? Before we dive into the financials, Walid, what are your thoughts?
So I'm very excited about the innovation center. There's Skunk Works, Shoprite.
Yes.
Shoprite to the Power X.
Power X.
They've already delivered some great products to market. That's already shown great traction and good results. And those products still have a long way to go, but they've already achieved much.
Yeah.
So the language of precision retailing excites me. I'm looking forward to see what they bring out in that space. How they become more. I mean, they state that they're a customer-focused company, and that's always a good positioning to have. And so if they combine that and precision retailing and more personalization for individuals, it'd be very interesting for me to see how they roll that out. And I think that precision retailing, talking to understanding the customer better, understanding the customer well, I think that's a recipe for success.
Indeed.
So I'm quite from that perspective. I'm quite positive and bullish about their future aspects in terms of products and services and that strategy associated with it. I think also the management team have done well in terms of managing the business itself. It's been a difficult trading time period, with lots of complexity in Africa and things, and they've been quite decisive in terms of cutting back on their losses, reorganizing the business to be more cost effective in terms of what they did with the furniture business, the international business. They're cutting their losses, and selling assets that they that is maybe not as effective for them as an organization. And again, very positive actions, decisions, etc. Their capital expenditure is pretty good. They continue to grow. They continue to add stores.
Yeah. And I think that's on my side the thing that I'm expecting and looking forward to in this year for them is that mass cash transaction that brings the fruit spot into the mix, and tying that to fresh eggs. And so you're right, good capex spend there, good expansion, and not forgetting their customer, not forgetting they know why they exist. So definitely. I wonder what will happen in terms of this meat processing facility. It wasn't clear, but it's part of the mass cash. So it's not something that I'm looking forward to, but next time we review Shoprite, it'll hopefully be a year later, and I'd just love to know what that means for them, having that asset on board. Cool. Let's end the strategy there.
Okay.
And let's dive into their financials. Let's take a look at, and I intentionally, maybe just for the listeners, I don't start with the financials because as soon as the results come out, the company will sing praises of itself in terms of financials, and every other financial journalist who rightfully so will dive into the numbers. So it's not a place where I think we're looking to shine in terms of a value add, but there is insight that we'd like to share once we've analyzed it.
Yeah.
And I always find financials to be a very straightforward story. So when it comes to a podcast, I'd rather we talk about the exciting stuff that's really under the hood. Financials to me are the flashy bits. It's the 2 liter. It's the range. Talk. Simple numbers, It doesn't tell you that the seats are comfortable or not comfortable. It doesn't tell you that it's got ambient lighting. It's a few. I don't know why a car needs ambient lighting, but that's a story for another day. So let's dive into the financials.
Yes, let's dive into the financials.
Okay, so Shoprite, I'm looking at my DuPont model. What stands out there for me, just the first 3 ratios that I like. Not one very heavy, but it's definitely positive. The sales over assets ratio. So their sales are looking much better than they did in 2020, despite the conditions. The ratio there increased from 1.9% to 2.2%.
Okay, cool.
So that's great. The assets over equity kind of hovered the same, dropped by about 0.5% from 4.1 to 3.6. Much of a muchness. So again, how much sales can we generate from our assets, and then of the asset, how much equity have we grown? So not much growth in terms of the asset, but we know the big transaction that's coming along. And then on the return on equity, of the equity that they have, what kind of return are they making? And that grew by a nice number, grew by 6%. So they went from 16.9 to 22.9%. When you're in the 20s, when it comes to return on equity, you're
a poster child.
You're a poster child. And then it translates into the profit.
Sure.
And my 3 profits that I like to look at, your top line, your gross margin, continues to grow. It's to 24%. The operating margin, which is once you take out only all of the distribution centers, the cost of running those, that's at 5.6%, up from 5.1%. And then the net margin, it is a business that is in fast-moving consumer goods. So you don't expect very high net margins over here, but they've gone from 2.1% to 2.8%. So very good net margins for the type of business that they are. And then we look at that I spoke about the return on equity. I always like to go to the RONA. And so what's the return on their net assets?
Yeah.
And their return on net assets doubled.
Oh, that's pretty cool.
Doubled from 13% to 26%. To 26%. So I'll break a little bit of the mold and say, how does that translate? So I'll jump a couple of my other ratios. What does a double on return assets do if you're an investor? And we'll jump straight to the number that I love, which is your yield.
Dividend yield.
For every rand that you have in there, invested in there, how much do you get out? And for every rand, the dividend that they paid out is 50%.
Yeah, that's pretty good.
So for every rand that you put in, you got 50 cents back. So if you invested 100 rand, you got paid a dividend of 50 rand.
Yeah, that's pretty
and you
cool.
still have your 100 rand in there.
Yeah.
So that's what
So
makes
2 years and you recovered your 100 rand.
2 years and you recovered your. So just to show you, that if you're invested in this business, you're on some crazy numbers. On some crazy numbers. So that's what happens with that RONA. So a double RONA gets them to move into this kind of space. I did talk about liquidity. I think I like to look at the liquidity. So how much demand is there versus how much they have to pay their suppliers. And 1 is my golden number. You must be above 1. You must have more demand than you owe the people. And they're still on 1.1.
Oh, that's pretty cool.
1.2 was previous, 1.2 the year before, 1 the year before. So they've remained.
It's pretty good for a big retailer.
Big retailer.
They're known for squeezing their suppliers.
It's a liquid business, absolutely. Known for squeezing the supplier.
Yeah.
But the demand remains there.
Yeah.
So it's a good one. Inventory, unfortunately, for this kind of business, inventory will hit your liquidity quite hard.
Sure.
So they're at 0.5 if you take the inventory out. But it is a fast moving game. You can't satisfy your customers without those big inventory.
I did notice in the strategy section there is a focus on industry, on inventory, and the inventory balances. So they're aware. The team is aware that's an area that needs more attention and needs to be pulled in.
Absolutely. And what that, if we look at the liquidity, I want to jump to what it affords you if you remain liquid and you've got good cash flows and you've got, your borrowings equity ratio is what they call it. And when we've looked at it, it's what I call the debt ratio. And I've said the golden, the thumb is about 70% to 80% is kind of what I'm saying. Their debt ratio is sitting at 72.5%.
Okay.
And down from 75.8%. So it's not something that's running away. It's something that they plug at and then they reinvest. And when I read this annual report, one of the statements that I loved is they have a target in the group, which is exactly what I've always said. So they look at it the other side. So they don't look at 75% the way I look at it. They look at the 25%. They look at the other side.
Okay.
And their range, the group's target is 25 to 30%.
Okay.
So they want to be
in that range,
in that sweet spot. So money is not lazy. And they were sitting at 24.9%.
Okay,
so to their own target, they missed it just a little bit. To my target, that's great. That's great.
Yeah.
You're within that range, and so your money is not lazy, and so that's very good. One thing that I didn't talk about with the other businesses, but I do want to talk about here because one should understand how good this management team is. There's something called interest cover. So you borrow a lot of money.
Yeah.
You borrow a lot of money to do a lot of your assets and a lot of your investments out there. And that money usually comes from the borrowing, the debt comes from a bank. And that bank charges you interest. So besides liquidity, another thing that you can look at is this interest cover. And interest cover is very much paycheck to paycheck living. How many paychecks can I survive
if you got no more additional income?
Yeah. Or how many more months can I survive if that was my last paycheck? I think that's how I should say it.
So how many months?
How many months
interest
can you
cover?
survive with just one paycheck?
Yeah. Okay.
Right.
Mhm.
And a well-oiled business that's not in FMCG, fast-moving consumer goods, if it's in another, they try and stretch that out to 6 months, 12 months, or even 18 months. To such a business running such a big revenue sheet, they operate very thinly. They operate on this like knife edge, and they're on a 2.2% cover. 2.2% cover from 2% cover from 2.1% cover. So they always only have 2 months worth of money.
Cash money. In terms of covering their interest.
Covering their interest. So
before the bank starts knocking on your door.
So if you take the KZN civil unrest, and they were not able to earn any income, and let's say that was nationwide, and they were not able to generate any sales whatsoever, they can only survive for 2 months before the bank will say, okay, if it's not force majeure and it's not any other reason, like you really have to pay us that money, that's the only time that they're in trouble. So it always reminds me, this interest cover, of that old analogy when it comes to a management team running a ship like a biker, that MotoGP biker taking those corners, you swing the bike, all the way to almost the ground, just 1 more millimeter and the handlebar touches the ground, and you probably even die. It's a fatal crash,
Yes.
So, but the closer you get to the ground, the little bit faster you go than the people that you're competing against, and therefore can afford you to win that race. So 2.2, let's call it 2 months, not say 2.2, just say 2 months worth of cover. That is mastering risk.
So some would call it high risk, right? Because riding those motorbikes it's a high risk game.
Absolutely, and it is high risk. And there's no two ways about it. But you keep it that way for the past 5 years or longer. That's how you operate as a management team. That's how good they are. They're expertly skilled.
And you would expect that something like a pandemic would knock you put that under pressure, right?
Yes.
And even in the context of the pandemic, they've been able to manage it.
Absolutely able to manage it. So very incredible performance there. For such a company. If you are a supplier to Shoprite, is another one we chatted about when we were at Advitech.
Yes.
If you're a supplier to Shoprite, now it's the opposite. How much should you have? How much coverage should you have?
How much squeezing do they do?
And I think it was with Whitey Basson during his time. There was always that anecdote that if you ever go to the Shoprite head office, rent a very beat up car. Because if you show up there with the Mercedes-Benz, or let alone even something better than that, he goes, that's why we don't need to pay this guy. He's okay. He's making enough money. But also, having said that, they are scale machines. So even if you're a supplier to such a business, it's very long turnaround times, and specifically here, it's 60 days. And 60 days in the context of a business as big as this is actually good. It's actually very, very good. You probably got 30-day terms with them, and they probably just misbehave every once in a while and push you out to 60 if you're one of the bigger guys. But it's well worth it for you. I mean, they've dropped that number from 62 days. Absolutely. They've dropped that number from 62 days, which is just over 2 months, to 56 days. So
getting better.
So they actually behave quite well. So a lot of people have been showing up with old Toyota buckies. Clearly.
But it's still, right? I mean, they're getting 2 months worth of income before they pay a supplier 1 month.
Yes. I mean, their data date is 8 days.
8 days.
So in 1 week.
Yeah, in 1 week they pay. And then they squeeze it for another 12 weeks.
12 weeks. And generate all the money they need for interest cover. from your money, right?
Yes.
Right? But these are the tricks that you have to employ. Pay your creditors, settle your creditors as late as possible. But don't cripple them.
Is there an argument that that creditors should be part of your debt calculations in terms of that? Because it certainly is a form of borrowing.
It is a form of borrowing. So they do show up in your balance sheet. They're under accounts payable. Mm-hmm. They're under your current liabilities, but they're not under your non-current liabilities. Mm. So they do show up. And anyone looking to do financial transactions with you, whether they're borrowing you more money or you're investing or they're coming in equity or whatever it is, they do look at that line, and they just look at what type of corporate citizen you are, and then it's funny, when you hit the 150 days, numbers, then you're a bad citizen. So even the investors don't like that. You and I have worked with an organization before where the only way they got money was by suing government every 150 days. Go to court.
Well, that particular data. Go
to court. Get your
attach the assets.
Get your money, and then do it all over again. And that's bad corporate. That's bad. Well, they were not corporate, it's government, but that's bad citizenship. That's so it is a number that they look at, and it is a number that I think is taken into account. Yeah.
Cool. Okay.
Then
what other ratios do you have?
Other ratios, I'm just looking at if any of these are noteworthy. I mean the dividend yield is probably that really last one that I'd like to talk about, which I have talked about already. I jumped all the way down to it. Excuse me. It's really a good one, to get 50 cents back, especially in this day and age. It's I think a very good investment to go in, and I think those would probably be the ratios that at most want to focus on. The rest I find they are financial boring. Yeah.
The normal stuff.
Well, I do have a question for you, and I catch you off guard. So I like doing that.
Yes, a question you did not prepare me for.
I did not prepare you for, because you don't want to be prepared. And we spoke a lot about their tech leverage,
yes.
The Shoprite to the power X and stuff. With this kind of wiggle room, let's call it 5%, you can still go borrow for another 5% and assume mass cash is in the bag and stuff. And you were sitting at Shoprite. What kind of businesses are you out looking to bring into your fold if you're looking at it to grow your tech acumen? What would you be shopping for?
Oh, from a tech perspective.
Yeah.
Oh, okay. I thought you were gonna because what Shoprite's really good at is scaling, right?
Yes.
And so opportunities to scale and those kinds of businesses.
Yeah.
Shoprite has already done quite a bit in the payment space, and I think as the country is, or rather as our national payment system opens up a little bit and allows kind of thing, I think there's opportunity for Shoprite to get in there, maybe a payment gateway, value-added services.
Yeah.
They already do a lot of that with their market money, but there is opportunities to expand. There's a couple of gateways out there that they could acquire, and they could maybe bring in a couple of point of sales.
Okay.
We know that the Reserve Bank is doing work on blockchain, and that they're going to most likely bring a digital currency to market. They're busy experimenting with that. They're busy putting in place a mini RTGS. so instant settlement with a blockchain type solution.
Okay.
And so I think blockchain would certainly be a space I'd definitely be looking at from a tech point of view, because the technology itself has proven itself, and we know it's got a space to play in the value chain, that it's reducing costs significantly.
Yeah.
And the kind of footprint that Shoprite has, a blockchain capability in that would give them enormous leverage in terms of not just their precision retailing, but also their other technology capabilities.
Okay.
Then, because they're a retailer,
Yeah.
if you're looking at, for example, what Amazon is doing with Whole Foods,
Yes.
and the technology
Yes.
components there,
Yes.
right?
Yes.
So one thing you can see, even through they generate a lot of data. They've got a lot of data that they're generating.
Yeah.
And so definitely I'd be looking at a couple of AI.
Yeah.
I'd be looking for where do I find the bright minds, which organizations are they in that are doing really productive things with artificial intelligence and
precision.
Yeah, 100%. Right?
Yes.
Because they generate so much data,
Yeah.
they need things that's going to use the data.
Yeah.
Kind of thing, and that can be quite challenging, and they need smart things that's going to use the data. Which one was that? and then last but not least,
Yeah.
An organization with a supply chain like this, and a food infrastructure like they have.
Yeah.
IoT must be right there on top,
Right.
in terms of the sensory information that they can get about their infrastructure, the entire value chain from beginning to end, to be able to track and trace individual products, to be able to track and trace exposure to temperature, cold chains, all of those things would benefit significantly from an IoT capability. So I'd certainly be looking for a couple of IoT product, maybe companies that's manufacturing some products that's relevant in this space, or technology savvy companies in the IoT space, kind of thing. So those are kind of like 4-5 areas, tech areas that I think would significantly enhance a retailer of this kind of scale, to be able to leverage what they already have, and then to build that capability on top of what they have, and then give them that leapfrogging effect. Thanks for the prep, guy. I might have had more.
You are welcome. You are welcome. I'm a gift that keeps giving. Run the notes.
so my I think.
No, I agree. I think that's I think that would be probably what they'll be looking at. And so this has been an interesting one for me. I've enjoyed it. I think I did mention it at the beginning, but I mentioned it again. How good this company is. This is really from their SENS report, not even from their annual report. So really a company that's together, that's very transparent. To buy or not to buy?
No, for me, it's an easy buy.
Easy buy, absolutely. So definitely a buy for me as well. Not financial advice from us, just insight. Speak to your broker, speak to your Sangoma, speak to somebody other than us. And until the next one, thank you very much for your time, and thank you for listening.
Thanks.